everybody. Thank you all for coming to ReTalk TV's first home buying seminar. Now, the Home Buying 101. So my name is Carlos Jimenez. I do mortgages, and I'm going to allow each one of our panelists to speak and introduce themselves, and then we're going to get into our questions.
Hello, my name is Xiomara Medina. I do mortgages. I work for United Mortgage Corp.
My name is Frank Mistretta. I'm with Realty Connect USA. Thank you very much.
Hi, my name is Nehal Trivedi from Trivedi Law Group. I'm an attorney practicing for 20 years in Jericho, New York.
Good evening, everybody. My name is Mitchell Allen. I'm with Inspected First Property Inspections. I'm a licensed New York State property inspector and mold assessor.
Good evening, everyone. My name is Ingrid Schwartz, and I'm with Nest Abstract Services, your go-to title person.
All right, very good. So we're going to begin. Basically, the home buying process of the home starts with credit, but one of our guests was not able to make it today, so we're going to skip over to Xiomara, who will be our representative loan officer. And so, Zio, I just want to start with your first question. What is the difference between pre-qualification and pre-approval?
So the pre-approval is done from the bank directly. It goes through underwriting, is a better chance that that loan is going to get approved. It's still subject to final approval, of course, but it's better than a pre-qualification, which is done by the loan officer. They may or may not be on point. Sometimes if you're too close, it might go through, it might not. So it's better to get a pre-approval than a pre-qualification. It's more valid. And I'll touch a little bit on the credit. Utilization on the credit should be under 10%. Because of the COVID-19 right now, credit should be at a minimum of 660 above. You have better chances and you get a better interest rate.
Excellent. Now the next question I have is, what types of mortgages are there, and which one is the best for first-time buyers?
So there's an FHA, and it all depends on your debt-to-income ratio. So basically, is the amount that you're making a year, and that you divide it by 12, and you divide that further by around 50%. I'll just make the math easy for everyone. So 50% of that monthly income should cover your taxes, insurance, principal and interest, and everything that you have on the credit. Only the stuff that you have on credit, not the utilities. So basically, if you have a car, if you have a personal loan, if anything that appears on the credit, the minimums, you gotta add those up and subtract them from that 50%. That's how we calculate the approval. FHA is one that allows for a little more higher debt to income ratios. And there's also conventional. If you have really good credit, you could go for conventional, but your debt to income ratios are lower on that. So instead of 50%, it's more like 45%. So every product, every situation is different, and different products fit different individuals. So it's always good to do a one-on-one and be able to look at your scenario and determine which one you qualify, which one's better for you.
All right. Now, after you have that pre-approval from someone like Zio, basically, then that's when you start the shopping for the home. And so we're going to go with Frank on the next question. Frank's the real estate agent, so you want to be able to make sure that someone that's extremely qualified knows what kind of a home you're looking for. So, Frank, what are the steps you go through with your buyers, and why through a realtor?
Okay, so the first step is actually taking the pre-approval from Xiomara, okay, and then she'll give it to the potential homeowner and then me. I'll take that pre-approval and I'll take her criteria and I'll put it into our software. You'll tell me how many bedrooms, how many baths, with school district, taxes. I'll punch all that in, and then we'll begin to search for a home. So there are 9 steps. Finding a home is the first step. The second step is trying to get you an accepted offer, and in this environment it's a little difficult. Once you have an accepted offer, it takes 5 to 7 days to get into contract. The next step after that is doing what we call an inspection or an engineer. Now you have life insurance, you have insurance on your car, I like to think that buying a home, spending $500-600 is a good investment because the inspector will inspect everything in the home for you. So that's an important step. The fourth step is getting into contract. So when you get the accepted offer to the contract, you have 5 to 7 days. And I also believe at the end of the day, getting a good attorney is extremely important because that is your largest purchase throughout your lifetime and you want to be protected for you and your family. After you go into contract, the bank will do the fifth step, which is an appraisal. Now, the bank is not going to loan you money, $300,000, $400,000, $500,000, $1 million, unless your house appraises. So that's the fifth step. The next step is a commitment. Once the bank gives you your commitment, then you pretty much know that you're going to be able to afford and get the home. The seventh step is clear to close. Once the bank gives you the clear to close, it typically takes 3 to 5 days to get into contract, maybe not get into contract, to close. And then the eighth step will be actually closing, and the hard part there is coordinating the 3 attorneys. Now, you're probably wondering, why are there 3 attorneys? There's the buyer's attorney, the seller's attorney, and the bank attorney. So all 3 need to be on the same page. And then the last step is actually one that I put in, which is celebrate. Throughout this process, there's 8 steps, and you need to celebrate because now you have a beautiful home. So thank you very much.
Excellent, all right. So now, after the pre-approval, well, we already got that, is it a great idea to shop for your attorney while you are shopping for a home, that we feel comfortable with the attorney that you pick?
I think there are 3 people that are key to buying a home. I like to think that in terms of the pecking order, the mortgage person is the single most important person. Why? Because they're going to loan you the money. Secondarily, the attorney is very, very critical because you need to be covered legally. And most agents think that they're the most important person. I like to think I'm the least important person because without a good mortgage and a good attorney, you're not going to close. So yes, it's very important to find a good attorney and look for that attorney.
And a good realtor.
So we've established basically that having an attorney is fine during the process.
Yes.
So we're gonna go to Neil. How are you, Neil?
I'm good.
Good. So why do we need an attorney? Like, why can't we just deal with everything direct?
Well, obviously, attorney is a person that's gonna advocate your position. After Frank has shown the house, has made the offer has been accepted, hopefully there's a binder that he has created that allows us to see what the price, what the criteria is, what the amount for mortgage is, what's stated on a binder. Usually there's a buyer's or a seller's attorney listed on it. And so normally we need an attorney. As an attorney, we're looking out for the buyer or the seller's interest. If it's a seller's interest, then we're preparing the contract. If it's the buyer, we're reviewing the contract, making sure that the contract deposit and the standard languages. Also, sometimes there are a lot of situations where there's a layover where the buyer or the seller needs to stay in the house for post-closing, after closing. So the lawyer in general basically, basically protects and looks out for the buyer's interest or the seller's interest. He's advocating and making sure that the process is done well, and at the same time, the legal paperwork is done well.
So now, so how exactly do you protect your clients?
Okay, well, first of all, if a client calls me, the first question I ask them is have they done their due diligence in having an inspection on the house? If the inspection is done, if they're satisfied with it, then we're going to contract. We make sure that the contract's provisions are in their favor. If it's a 10% contract deposit, which is normally a standard practice, however, if I'm representing the buyer, I try to advocate and tell them that if I could try to put down 5% down. Why? Because the funds are being held in escrow. As the price of homes are increasing over $1 million, a lot of money is at stake, right? And sometimes these homeowners are buying it for the first time. $50,000, $60,000, $70,000 is a lot of money to be held in escrow. So we try to minimize the rest. Obviously, everybody does want to close on a house. They want to buy. The seller wants to sell. So there's things like that. We also do title searches. So we would call the title company and we'll order title searches to make sure the taxes are properly represented. Lien search are done, judgment searches are done. Any bankruptcies or any credit issues that are there. Survey we do certificate of occupancy to make sure that the property is qualified as a one-family house versus a two-family house or other things. On a commercial property, we make sure it's a mixed-use property. If there's an extension on the house, we kind of get an idea if there was a permit that was open. So things like that, we make sure it's done properly, and then finally, when we come to a closing, we make sure that the adjustments are done. So there's a lot of little things, and it's a process, like Frank said, that at the end of the day, you really have to enjoy the process and not look at it as a negative process. So that's where the lawyer comes in. We get the least bucks, but we get to protect the buyer, very hard.
Okay, so now, once you find your home and you know what you're buying, and you make sure that you don't get any surprises, it's a great time to deal with someone like Mitchell. Mitchell Allen, he's a home inspection person. So, Mitchell, why do we need a home inspection and who pays for that?
Well, let's start with the second part first. Who pays for the home inspection? In the most traditional sense, a home inspection is paid by the prospective buyer. And in fact, that's the person that should be paying for it because they're the person at risk. They're the person who is about to invest in the largest personal investment that any person can personally make. In the average market today, a person is going to be borrowing someone in the neighborhood of $300,000-$400,000. So a home inspector is trained by New York State. We are fully regulated by New York State, and we are trained to evaluate the major systems in the home. That includes the roofing system, the attic system, the structure, the foundation, the grade and the land around the premises to make sure that there's proper drainage. We inspect the entire electrical system, including receptacles, switches, and the electric panel. We inspect all the fixtures, the toilets, the showers, the sinks for proper drainage and supply. We inspect the mechanical systems, that's your heating and your air conditioning plants. We inspect for termites. On Long Island, there's a big issue with termites. We're professionally trained and certified to inspect for termite, or what we call wood-destroying insect infestation. These are all things that we're trained to evaluate and give the prospective buyer our opinion of the premises. We're not going to tell the person whether they should buy the property or not. What we're going to do is supply them with the proper information so that they can make a good decision about their investment long term. On an average inspection, we spend about 2 hours inspecting everything in the home. We do recommend that the buyer attend the inspection. An inspection is not only an evaluation of the system, but also training. It's an opportunity to show the prospective buyer where the major disconnects are, where the electrical disconnect is, where the major water disconnect is. Because in an emergency, you want to be able to turn the water off in your home if there's a flood, if there's a pipe break. And we teach you how to do that. Exactly. We teach you how the systems operate. So in my opinion, and I realize this is a little bit self-centered, but in my opinion, it's the most important thing that you can do. Never ever avoid the home inspection. It's the least expensive part of the process, but it can give you the greatest value.
Absolutely agree. The times that I purchased a home, we've been dealing with termites, we've dealt with cracks in the concrete, and so having an inspection just guarantees that your investment stays an investment and not a loss. You don't want to buy something that's not worth the money. So thank you very much for that. Now, we're going to move on. So now you're in the process where at this point, one of the things you need to look at in your purchasing of a home is the process of making sure you look at your credit. So I always recommend checking your credit, making sure that there's nothing that would alert us, because I do mortgages, so that we're not saying, okay, well, look, you were late a few times on your car payment or things of that nature. You want to make sure that you try and smoothen out as best as you can your credit and make sure that you're, like Zio had mentioned, that the score that you have is high enough that you can get approved before you even get to Zio. Now, so you've done your credit, you started your loan, you found your house, you've inspected it, and it looks good, and now you're in the process for for your mortgage, for the mortgage. And this is when someone like Ingrid comes in. Hello, Ingrid.
Hello.
And to make sure that your title to your home is clear. So Ingrid,
Yes.
first, people may have heard the word title, usually title, they think about the car. Can you tell us what a title is for the home?
Yes, okay. You have to understand the title is that it's probably the least known factor in the whole process, but it's probably one of the most important. You need title because you're just buying the most expensive item that you'll ever purchase, a home, $500,000, $250,000, $1 million home. And what is going to protect that home for you as a new buyer? And that is title insurance. Title insurance is the only insurance that is actually protecting you from the past. Everybody's used to paying homeowners insurance, car insurance, and flood insurance. These are all insurances that are saying, you know, I hope I don't get into an accident, or I hope I don't have a flood, and it's there in case that should happen. With title insurance, what we're doing is we're insuring for the past history. So we're trying to protect the new owner from any liens, encumbrances, and any judgments that have been placed on the owner that owned the house and is now attached to the property. The most common one that most everybody understands is a mortgage. So the owner of the home has a mortgage, which has to be paid at the time of closing. So that's one of the simple ones that is easy, that everybody understands. But there are many other things that could be attached to the house. In the state of New York, one of those things is traffic violations. If you have a traffic violation in the state of New York, it will be attached to your home. If you have federal tax liens, if you have not paid your alimony or child support, that is all attached to the house. And as a title company, my job is to go through all the federal, state, municipalities, all the different governments, and get all the information that is attached to the house as well as the homeowner. So we do an extensive search on everything related to the house and the homeowner, so that when you buy the property, everything that was attached to the house has been taken care of, remediated, and now the only thing that's going to be attached to the house is possibly the mortgage that you will be putting on the house. And it's very important to have title insurance. You cannot buy a home unless you've had a full title search done. And that is usually ordered by the attorney. But in the state of New York, it is also dictated that the homeowner, the person purchasing the property, has a right to choose their own title company, because they have, you know, they're paying for this item. And you get a good attorney like Nehal, who will explain the whole process to you, because it is your guarantee that the home that you purchased is yours. And imagine if you spend all this money to find out that you don't own anything. So without title insurance, you really don't have a property, you really don't have ownership.
So Ingrid is part of Ness Abstract Services. She handles New York, New Jersey, and Florida. It's important to know that because she knows the ins and outs of each one of those states. Different states have different rules and so on. So me handling mortgages, titles, awkward things happen all the time. Family comes out of everywhere, whether 2 or 3 generations down, and any one of those people can make claim to the property that you have no clue that you thought you were owning. They can come out and take it out from under you. So
Well, that's what protects you.
exactly.
I mean, if you're buying a property that you believe the person who owns it is selling to you. But what happens, the only thing as a title company that we can project and look at is anything that's been recorded in the county's clerk office. So if something is done privately, or there's a will that was misread, or there's forgery, or anything like that, that's when title policies is there to protect you. And what does it pay for if somebody comes knocking on the door and saying, I own this house, and show you a false deed? Right now, one of the number one white-collar crimes is deed fraud. So you want to protect that. So now somebody comes knocking on the door and says, I own this property. What do? You call the underwriter that you've been assigned, which will be in your policy, and they will pay for all the legal fees that are going to occur to be able to represent you. The underwriter, the people that you're working with and who you have the policy with, they will pay the attorney, but the attorney represents you, not the company. And what that does is that protects you. And if for some reason there is a judgment that comes against you because it wasn't done properly by the title company, then that payment will be coming from the title company and the underwriter. So it's your protection. So if somebody comes knocking at your door, all you have to do is call the underwriter and they start the process and they will handle it all. So it's really feeling at ease that when you buy a home, this beautiful home that's yours is going to be yours.
So now, the process, we've tried to do it in linear order, but are you the last person that we should be looking at? When is the appropriate time?
Well, there's a lot of schools for thoughts on this. Usually the attorney is ordering the title, usually when there's a fully executed contract. And what does that mean? That means that the buyer, because the buyer signs first and the seller has signed the contract. Once the contract is fully executed, that is the time that you want to order your title. Because the title process the title report has a lot of information that the attorney needs to make sure that he's protecting, the buyer's attorney is protecting his clients. And in the title report, which the attorney reads, it gives them all the judgments against anybody, and fraudulent judgments. It gives you the taxes that have to be paid. There are things in the title report that we call insurable, which is all the liens and encumbrances that are attached from a third party. And here in New York, there's a lot of steps to this. And the sooner you get your title report, the sooner we can start taking care of all these issues that come up in the title report. And when you have a good attorney like Nehal, he'll review it and make sure that he's protecting his client, whether it's the seller or the buyer, everybody is trying to protect them. And it's important that you understand that title insurance as client usually never meets me. So it's something that usually is through the attorney. But I'm always here to help and answer questions because I think it's important for every homeowner to understand title insurance because I don't see it being explained to them as thoroughly as it should be done. And as I see Nehal doing with his clients, that's important. So, title and all these other steps are great, but if you don't have clear title, and if the title is not prepared, you won't need any of them because you can't close. So, I like to think of myself as, we're really
You're the bow.
I'm the bow, exactly, right. That's
Before
what I-
celebration.
So
Yes.
just to kind of elaborate a little bit, so once again, what you've seen is on this great little program that we put together here for you is the public essential processes. It doesn't cover everything. There's a lot of things that happen behind the scenes, a lot of research that gets done that you don't know and that you're not aware of. But this basically becomes your team in the process of you purchasing your home. Now, there are additional pieces to this process, like I just mentioned. Make sure that you follow us on ReTalkTV. More clarifications of the home buying process, what we'll be covering. And I want to thank all the panelists for being here. And thank you all who have come and those who are watching at home.
If you have questions at home that you would like to ask any of the panelists, or questions that you guys may have here.
Someone is asking next, but
We have a question.
What is the current interest percentage? Is there a good moment to refinance in order to lower this percentage?
If there is a better time, I don't know which one it is, but now is the best time to refinance. The rates are at all-time low. I don't remember a time that they were this low, so definitely is a great time to refinance right now. There's a big wave on the refinances. And it's also a great time to purchase because it's gonna cost you a lot less with the interest rate right now the way it is than it would if the rates went up. So it's definitely a very beneficial time to get your hands on a piece of real estate, refinance, perhaps invest with the money that you pull out of your home. It's definitely the best time.
Right now is basically, I'll let you speak in a moment. Right now is the best time as a buyer's market. Not thanks to COVID, but because of COVID, a lot of changes have been made. And interest rates are historically low. They're the lowest they've ever been, probably in history.
Mhm.
But you wanted to add
Yeah,
something.
I just want you to know when you're refinancing, look at right now, if you own a home, look at your interest rates because they're definitely the lowest they've ever been. But also know that as a title company, it doesn't matter who you work with, whatever bank you work with, whether it's one of the, Chase or one of your local banks or anybody that's been with, so no matter any company, you can choose your title company and you can always give me a call. Because it's important for you to know that.
Do you have any other questions?
Any other questions?
Yes, what is the minimum age to buy a house? If someone is 14 years old, 15 years old,
No, it's gotta be
I
18.
don't, a friend asked me
That's
that.
a question for
18.
Neil.
The legal question,
You
I'll
have to
direct
be
to Neil.
18, you have to have 18 and good credit, right? You may not have good credit if you're 18.
So that
Yeah.
comes to the next question, how can someone at that age start building a good credit?
So basically, if you have someone in your family or a friend that has good credit, they can authorize you as an end user on some of their credit cards. That would establish automatically good credit for you. That's one way. You could also get secure cards and just buy little things. Don't go overboard because you don't want to be over 30%. Definitely not over 30%, and of course under 10% to be able to utilize as much of your income to qualify. Because $50, $100 that you're paying, that could probably qualify you for like $20,000 to $40,000 less. So you want to make sure that your utilization is under 10%. We have any more questions?
I just want to elaborate on the 18-year-old. So keep in mind, some of the things that we didn't state was some of the things that we're going to ask for as documentation. So we want to make sure that you've had a job, that you're going to have consistent income. You want to make sure that you have pay stubs and a couple of years worth of bank statements and things of that nature. So
Payment,
you know,
closing costs.
Technically, you can't work until you're 14 in most states.
right, but she's
So-
18, so if they have 2 years worth of working, of working, then that counts.
Yes.
Right, if it makes, especially like when I was 15, I was making 80,000, so I would have qualified.
If you're emancipated, I guess you would be able to. If 16 would probably.
So basically, having credit cards, make sure you're paying things on time, income, have a bank account. Those are some of the things that we're gonna be looking at when you're processing a loan. Any other questions?
What is usually the cost to refinance?
So basically, there is some cost. It's not as much as when you're purchasing. So usually you would refinance from an FHA potentially to a conventional, which will lower your payment drastically. And there are some processing fees. We definitely, every case is different. So we definitely go through your case and we give you an estimate, a closing estimate within 3 days of you doing the application. So that you know exactly, everything is itemized and you know exactly what your costs are, your closing costs. So there is taxes that need to be taken under consideration, transfer taxes, depending on if you just got a mortgage less than 2 years, you could potentially qualify for a streamline, which is a lot less than a regular refi. So every situation, every scenario is different.
Can I ask you a question?
Yes.
I think a lot of first-time homeowners, or not first time, but second time, or they wanna refinance, you said about generally, but what's the percentage, if I have a 4%, is it worth to refinance to, if the interest rate is 3%, what's a rule of thumb? Or is it a 1%, a 1.5% that I'm actually?
To be able to say it's beneficial.
That it's beneficial,
Yeah, one should be the minimum for it to be beneficial, but again, in every situation.
So if you have 4.5, but the rate is around 3, so it's actually beneficial to
Yeah, that's-
refinance, so it's
yes.
So let me add to the answer there. So one of the best benefits, if you're gonna refinance, we're asking about what a percentage would be a benefit. A lot of that percentage is going to be based on how much is still refinanced. If your house is $400,000, 1 point or 1 percentage point would be tens of thousands of dollars over the time of 30 years.
Yes,
But if your house is only $100,000, the benefit is not gonna be out so high.
And
So
also-
you gotta look at those type of things.
And also, you have to understand if it's FHA, you're gonna save on the insurance. That alone could be anywhere from $100 to $300 alone, plus whatever you
Per
save per month. Plus whatever you save on the actual refinance by dropping the rate. So it could be drastically, and every scenario is different. If you have more equity, you know, there's so many different variables. If it's in New York versus outside of New York, because New York, the taxes are more expensive, sometimes it may not be beneficial, because it adds a little bit to your loan amount. But if it's beneficial, it should be beneficial. You shouldn't, your mortgage person should be able to show you what the benefit is in the long run, like over the years. So you're gonna save this much by doing it now, but you're gonna put in this much. And I think we have more questions.
What is the current protocol for buyers with tax IDs?
Right now, right now because of the COVID is a little harder because we had programs for corporations to buy homes. But right now, because of the COVID, those programs are completely closed. So you do have to have a permission to work in the United States. You do have to have residence and you have to have a permit to work, a working permit.
Working for.
And very quickly, with COVID has changed a lot of the things. I'm sure for each person that works here, their policies have changed. So it will, keep your eyes and ears open for information on that. I think we should try and put something together now.
I think he wants to talk about some of the laws that have changed.
Carlos, thank you for bringing that up.
Sure.
With the advent of COVID-19, it is now mandatory to do two things. There is a COVID disclosure form that must be filled out, and then additionally, there's a COVID questionnaire that must be filled out. Also, as of July 1st, most agents don't even know this, but New York State has mandated that because of fair housing and discrimination, you must sign a fair housing and discrimination form. So we at Realty Connect have been on the cutting edge. Our broker, John Fitzgerald, has mandated that all agents at Realty Connect as of July 1st must take an additional 2 hours. I happen to be the first person to take the test and got a 95 out of 1,000 agents. So we take that very, very seriously. And it's very, very important because most homeowners don't even know that they can be sued because of discrimination.
My question, how much I needed for the down payment, the 3%?
Yeah, you could go as low as 3% depending on, if you qualify for a conventional, you could go down as low as 3%. If you qualify for an FHA, it's 3.5. Yes. And also that depends on your DTI ratio. If your ratios are too high, then you probably want to put it down more on the down payment to be able to qualify. So that depends, every scenario is different.
Depends on the property you buy, right?
Depending on the property you buy and depending on the income of the individual. So that's a very, very good question.
And then depending on the situation, there'll be closing costs as well.
Yeah.
All right, thank you so much, everybody who's watching. We're gonna do more of these on an individual basis, and then you'll be able to ask questions on those specific shows because they'll be live. Thank you, panelists, so much. I know this time is important and valuable. So thank you so much for joining us. Take care, everybody. Have a wonderful day.